Welcome to my monthly update on alternative asset fund administrator and auditor league tables. You may not know that there are over 600 fund administrators and 500 audit firms servicing the private markets. I am George Evans from Convergence. Convergence is a data and analytics firm focused on over 40,000 SEC and state registered investment advisors. We monitor close to 400,000 funds globally serviced by the industry and have been producing league table and market share data over the last 7 years. This has been most helpful data to the industry watching the shifting sands. Note that league tables are only available to Convergence clients. League tables can be purchased at the Convergence e-commerce site, which is at convergenceinc.com, and simply go to the e-commerce tab. I will provide some commentary on the movement we have seen from February 2020 to February 2021 in the market. I'll walk through that detail and then I'll wrap up with some of those headlines.
All right, George. So let's talk about the fund administration year-over-year market growth for the month of February.
Okay, very good. So in the last year, we saw private and fund asset growth as usual. Advisors disclosed over 90,000 private funds, which is a net increase of over 5,000 funds. That's up about 6%. And advisors also disclosed assets of 20.7 trillion, which is really an increase of 2.15 trillion. And that's up close to 12%. What's interesting, Dario, is the top 25 administrators won 44% of about those 8,900 funds that were disclosed. All other administrators won 20%, while advisors who self-administered kept about 36% of those funds. The top 25 administrators won 55% of the 1.3 trillion in new fund assets. All other administrators won 11%, and advisors who self-administered kept about 34% of that 1.3 trillion in assets. We at Convergence continue to see very strong year-over-year growth in private equity funds and assets and venture capital funds and assets. I wanted to make a few comments on self-administration. Today, out of those 90,000 funds, there are 31,000, so a little over a third of those funds in the market are self-administered. And that is up about 1,000 funds from that same time period last year. Self-administered funds represent 34% of all private funds in the market, and that's down from 35% in 2020. So this is a trend, Dario, we continue to see inching downward, right? Self-administration has moved through hedge, and now it's starting to move through closed-end funds. The value of self-administered assets totals almost $5 trillion, and that's up close to 9.5%. Self-administered assets represent 24% of all private fund assets, and that's down about 24.6%. New fund launches are down year over year. However, for administrators, fertile growth opportunities really exist. Administrators with the right technology can pick up valuable growth in the PE and VC segments as advisors continue outsourcing existing and new funds to third-party administrators. Cost pressures at the advisors, lack of scale, and the need to leverage the technology spend at an advisor will continue to move this business to fund administrators. I want to put up some visuals now, and what we'll do is show some of the folks who are listening to the podcast a few snapshots of the macro snapshots of the administrator league tables. A few comments that I want to make on the administrator front. So asset growth year over year is up almost 12%. And what's very interesting is the behemoths. So admins number 1 through 5 are not keeping pace with that 11 or 12% growth. In fact, over the last year, admins 1 through 5 grew at about 7.5%. What's very interesting, though, is when you start to look at administrators 6 and on. So administrators 6 to 10 grew assets almost 18%. 11 to 25 grew at 20%, and the self-administered market grew at about 9.5%. When you look at administrators 26 through 600, they grew at 20%. So really, if you take a step back and think about growth, that's 40% asset growth for administrators 11 to 600. And I think that the top 10 administrators should really study this interesting dynamic. We also saw in our market share league tables, a few administrators had notable decreases in funds and assets, and that's kind of noteworthy and something you can pick up in our league tables. But what's kind of the headline here? The headline is advisors are clearly moving down market with administrators.
Great. So George, are there any Convergence clients that you would like to recognize this month?
Well, some of our clients had a terrific month, and I want to give a shout out to a few Convergence clients. The first would be Gen 2. So Gen 2 Fund Services ranked #1 in net new funds, adding close to 400, and that's up 35% for Gen 2. Gen 2's success was driven in the closed-end market, private equity, real estate, and venture capital. And it really did pick up some nice market share, increasing its league table position to overall to number 13 from number 15. The second shout out I want to give is to SEI. SEI ranked #2 in net new funds, adding close to 300 funds, and that's up about 13%. It ranks #5 in private funds, maintaining its league table position. Their success was driven by growth really on the closed and open-end front, and their private assets increased almost 36%, improving its market share by over 22%. And SEI maintained its league table position at #6. The third administrator is Apex. Apex ranked #11 in new funds, adding 140 or so, up about 10%. It ranks #9 in private funds relative to our league tables. Apex's success over the past 12 months has been driven largely by PE and real estate, and their overall private assets increased 22%. The fourth shout out goes to Alter-Damas, another Convergence client. They ranked #8 in net new funds, adding close to 200, up about 14%. Alter-Damas ranks #11 in private funds, and their success was driven by PE, hedge fund, and venture capital. Their private assets increased over 40%, and their market share improved, and their league table position improved from #14 to overall to #12. And then the last shout out on the administrative front goes to Morgan Stanley. Morgan Stanley ranked #7 in net new funds, adding well over 200 funds, up about 19%. Morgan Stanley ranks #13 in private funds, improving its league table position. Their success was driven largely by hedge funds, adding close to 200, and their private assets increased close to 20%. They also improved their league table position from #9 to #8. So really a terrific 12 months for some of our very distinguished administrator clients. Let's move to audit. So on the audit front for the last year, let's first talk about market growth, right? We saw advisors disclose close to 90,000 private funds in total. And that's an increase of almost 4,300 funds, up 5%. Assets that were disclosed were about 20.3 trillion, and that's a net increase of over 2 trillion. So growth of almost 11%. When you start to look at the breakdown and decompose where that business is going, the top 25 auditors won 71% of the nearly 9,000 total new funds that were disclosed over the last 12 months. All other auditors won about 6%, and about 23% of those funds did not report a fund auditor. I want to talk a bit about that briefly. Funds not reporting auditors is a very large number, and that does represent a subject and an opportunity. It can be a situation where they are in the process of selecting an auditor, or that the fund is not subject to an audit. The former creates a great business opportunity for audit firms. So please contact Convergence if you want insights into these two populations. So let's go back to the growth, right? We saw major growth at the top 25 of the audit league tables of about 71% of new funds. That translates to about 88% of new fund assets, almost 1.3 trillion. All other auditors won about 2% of those assets, and about 10% of the funds that did not disclose an auditor represent the rest of those assets. We're also going to put up some visuals here on the audit league tables, and I want to make a couple brief comments. One is asset growth over the last year has been about 11%. And what's very interesting is, unlike the administration front, on the audit front, the big four very much kept pace with that growth and grew at about 10.5%. Audit firms 5 to 10, though, grew at about 20%, which is really double the market. And auditors 11 to 25 grew at 16%, which is 50% greater than the market. So, another comment I would make here are, advisors are also moving down market in terms of selecting auditors.
All right, great. Thank you for that. And on the same token, George, are there any Convergence clients in the auditor industry that you would like to recognize this month?
Yes, and thanks, Dario. So there's four that I'd like to give a shout out to. The first is Price Waterhouse. So Price Waterhouse ranks #1 in total private funds, maintains its 2020 ranking, and the real driver at Price Waterhouse was private equity assets. They grew almost 18% over this last year. The second shout out goes to Deloitte. Deloitte currently ranks #4 in total private assets. Again, no change from its 2020 ranking. It ranks #3 in assets, and its assets increased about 12%, primarily due to private equity. The third shout out goes to EisnerAmper. Eisner ranks #6 in total private funds, same as 2020. Its funds increased about 24%, and it ranks #8 in total assets, and its assets increased almost 8% over that time period. And then the last shout out would go to BDO. BDO ranks #8 in total private assets, an increase of 1 spot in its 2020 ranking. Its funds increased almost 5%, and its assets stayed at their 2020 ranking. So for these four firms, just a very solid 12 months.
All right, so George, do you have any final comments for the listeners, or maybe even some key takeaways and observations?
Yes, thanks, Dario. So I'd like to just kind of wrap up a little bit and talk about what we've learned and over this last year and what some of those headlines are. So on the administrator front, clearly we saw great growth, almost 12% in terms of assets. And what's very interesting on this front is administrators 1 through 5 are the only group of administrators not keeping pace with that growth, right? 6 to 10 grew at 18%, 11 to 25 grew at 20%, and the rest of the market grew at close to 20%. So we saw almost 40% growth relative to 12% market growth for administrators 11 plus in this market. On the audit front, some of the headlines are interesting also. We saw some great growth here, almost 11% in asset growth. The big four did keep pace with that growth, but we saw a very interesting trend. Audit firms 5 to 10 grew at 19%, and 11 to 25 grew at 16%. So really outpacing on a relative term some of the asset growth we saw at some of the largest firms. So just a few final thoughts. With these large numbers of service providers, often there's the discussion in the marketplace of, are these industries ever going to consolidate, right? It certainly does not seem to me like they are. We don't see that at Convergence as happening near term. I think you see some interesting M&A activity all the time, but these numbers continue to be quite large in terms of options in the marketplace. The second question I always am asked are, will advisors continue to go down market? Well, it certainly seems so. These numbers over the last 12 months clearly represent that. I think what we're seeing on both fronts is administrators and audit firms really need to operate across all asset types. The days of that monoline administrator or monoline auditor are far from over. I think what we'll comment on also is closed-end growth. Closed-end growth will continue to clearly outpace open-end growth. I also see on the administrative front, Dario, a really interesting phenomena where we're really seeing some very large, complex, European-based administrators coming to the U.S. And really, I think over the next few years will give some of the large U.S. administrators a real run for their money. So the last comment I'd make is I think we are going to start to see a little shakeout also in the top 10 audit firms. Those sands are shifting, and we're seeing some momentum or lack of momentum with certain firms. So that's how I'm going to wrap up today. I was, as always, would say, please contact me if you have any questions, and I look forward to seeing you and talking with you all next month. Thank you all, and have a great day.